There's quite a bit of consolidation going on in the banking sector here in Switzerland. Fewer banks, therefore, going forward. And the same thing is really happening with the independent asset management sector.
So Switzerland has recently adopted tighter and more regulations. So maybe you can start by giving us an introduction to the regulations that have been implemented.
It's true that regulations have increased quite dramatically, and this is rather typical of a reaction to a financial crisis, such as we've seen recently in 2008. So we've had a global phenomenon of increased regulatory pressures, and Switzerland has had to suffer the same. Various client protection regulatory changes, but Switzerland obviously also has had to deal with the increased tax compliance issues over and above the legal compliance issues. And the tax compliance issue has meant that they've had an increase in cost, as well as hiring more legal personnel to deal with the legal issues.
So you've mentioned these regulatory pressures that have been implemented since the financial crisis of 2008. So how have banks and independent asset managers, how have they reacted to these regulatory issues that have been implemented?
So when you get these increased regulatory pressures, quite often, and increased legal personnel that need to ensure that they are all complied with, it becomes a real challenge for the business to stay, for the company to stay business focused, as they become quite risk averse. And I think that if one remembers certainly the enormous fines that some banks have had to pay over the last years to various regulators around the world, and particularly the American regulators, you can imagine that firms have become incredibly careful and double or even triple check that their business is not going to suffer from that again going forward.
So how do you see the industry changing over the next few years and then also in the longer term?
Well, I think what's already happened is that a lot of the foreign banks that had branches or operations here in Switzerland have retrenched, and we've seen quite a number of banks closing down or selling their operations. That's mostly what happened, selling their operations to the banks that have chosen to remain in Switzerland and become stronger on the back of it, of course. So there's quite a bit of consolidation going on in the banking sector here in Switzerland. Fewer banks, therefore, going forward. And the same thing is really happening with the independent asset management sector, where the regulatory pressures have really made it very expensive for the very small structures to survive. So again, consolidation will be happening going forward, and we've started to see some examples of that already.
And as the Managing Director of FFG, how do you see FFG adapting to these changes also?
So we've taken quite a proactive view on this, and early on have decided that we really need to grow the business to be able to compensate for the increased pressures coming from the regulatory side, and being able to carry the cost that brings with it. But we've also proactively sought out a bit more regulatory oversight. So the Foreign Finance Group is now authorized by FINMA, which is the Swiss regulatory body that overlooks the banks, unlike all the other, or most other independent asset managers who are still with their self-regulatory organization. So we believe we are now being regulated by what we refer to as the gold standard. And we've even taken the step now to also be registered with the SEC in America. So I think we've really embraced more regulatory oversight in order to show to our clients, any third party that we deal with, be it a bank, that we really live up to the very highest possible regulatory standards.
Fantastic. Well, thank you so much for coming in today and sharing your insights.
You're very welcome.
That's all from us here in the Dukascopy studios here in Geneva. But if you did like this interview, do like and comment on dukascopy.tv.